Everyone, to this week's Elite webinar. The market has been on a tremendous rally. Once again, there's nothing stopping this thing. It just, every time we see a little bit of dip, it just gets right back up to near the all-time highs. Once again, this is a clear as it gets triple top. Okay, for those of you, as clear as it gets right here. All right, very much near a triple top here. Once again, we don't need to infer too much out of these patterns, but they are important to give us an idea. Anytime you have a multiple touch point top, whether it's a top or a bottom type of scenario, you realize that the market keeps coming back to these key points. Why is that? Now, there's a few reasons. In this case, speaking specifically of the dips that keep getting bought, there's a lot of liquidity out there. People are bullish. We know that. Obviously, we know that people are bullish. Like, look at 2024 to now, right? It's not that difficult to see the uptrend here. What happens from July onwards, though, is a little bit more sketchy and a little bit more open to interpretation because it's not as clear cut of an uptrend, right? And to me, this isn't surprising. For those that are just permables and everything going up and away, they'll be a little bit surprised or a little bit dejected, thinking that, okay, well, what's going on here with the last 2 months, right? We've got effectively a peak in the market that hasn't been breached since July, let's say 15th or 16th. Okay. And that's key. That's important to know. I continue to have these levels here. This is once again short-term support that's been uh, was resistance, but now it's support. Once again, I'm going to adjust this so you can see as the weeks go by how things play out, right? And once again, this is support. We got the resistance all-time highs here as also strong resistance. Okay, perfect. Hopefully these levels help you. Let me know in the chat if they do, and in the comments if you're watching this on YouTube afterwards. What I'm also going to do is draw another short-term support here. Right down here. Boom. Okay, these are the key levels. Nothing specific here, but 50 to 50 is what I feel is a good another support here. Okay, some could say, well, look at this 51.42, 51, 40. Yeah, that can too be something that's you know, uh, a potential area, but it's just one singular touch point. The reason I have it here is if you look back, we also saw this area at 52, 52.45 back here in May as well. Hence why I have the right here, back here. Okay. Now, what do I think can happen with the market? Well, I wouldn't be surprised if we see another closer point to the all-time highs. Remember, the big question mark is coming up, and we'll touch on that event shortly. There's a big, big, big catalyst, okay, that the market has been waiting on for roughly over a year now. There's been talks about it, and I think this week, this Wednesday specifically, could be that time where we see that play out. But I'll touch on that once we get to it. So far, the markets, here we are in the indexes, ETFs sector, sorry. We got the SPX about, 18, 19% up nearly after this week's rally. Everything is pretty much recovered quite a bit. Utilities have been on a tear, pricing in, potential rate cuts. So we know utilities and other income-based stocks do go up. Take a look at real estate uh, sector, right? Look at that big run up. Same thing, expectations of rate cuts. So you can see that play out. Tech is there, not the leader though. Year to date, not the leader. Utilities have come back, but they were underperforming for quite a long time. So as I zoom out to 2 years further, look at that, right? So context is very important in the grand scheme of things. We're just looking at year to date, right? When I press it here, when you go out a couple of years out, you can see, how consumer communications and tech have obviously been outperforming if you go back, um, all the way to 2023. Let's go to 2023, take a look, right? Consumer, what's it called? Communications and tech absolute outperformance here, obviously, right? So just a little bit of a bird's eye view for you guys here. Not much else to be gleaned besides, energy obviously continues to go lower. There is a bit of a demand issue that we'll touch on shortly. Here we have that oil chart again, right? Take a look at the break below that 70 ish area that we had, 69, 70 area that we had, and it broke below. So right now, oil trading about 69.24, a little bit of a pickup. We did trade this pickup here on Thursday and Friday off the lows via oil ETFs and made some money, and then we took the profits. So I'm happy with that. Quick little trade, so can't complain too much. But for now, the 70 area now is going to be a resistance, short-term resistance here. Okay. Uh, Gold. Look at the gold. Look at that break out of that channel, right? That I drawn last week. Um, Going back all the way to August, right? About a month now that we've been channeling between these two key areas here and a big breakout. So gold continues to go higher, all-time high, currently 2606 for price per ounce. Moving on to government bond yields, again, across the board, lower, sloping lower, right? Not surprising. Once we touch on why. And it shouldn't be coming as a surprise if you were following along at Lee, if you're following along on the webinars, you kind of know why they've been moving because I've been talking about it for weeks now. US dollar holding up, relatively stable comparatively, still high above the 2022 levels, but back around the 2023 area. Okay. Now, with that said, let's take a look at the earnings calendar. Which one do we do first? Earnings or events? I think we do earnings first. So not much, pretty bare bones earnings week, right? The only thing that I think is even worth maybe keeping an eye on is FedEx, right? For logistics. If you really want to, look a little bit more at the consumer side for Darden Restaurant, maybe, and General Mills, right? So besides that, nothing really sticks out to me here. Okay, Lenner is another one, but that's a house building stock, if I'm not mistaken. So construction, housing. Okay, now the important bit, the events. Here we're looking at the events coming up for this coming sorry, I have the wrong week. I don't know why I have the wrong week here. Next week. Oh my God. One sec. Let me see why it's picking up. Mm, I see why. Picked the wrong setting. Okay, got it for next week. Okay, so here we have the events for the coming week. Okay, it's not showing for whatever reason, it's not showing me the what's it called? Hmm, what the fuck is wrong with this thing? Here, 18th. There we go. You guys can see the screen? See the Wednesday catalyst here? Perfect. Good. So I don't really care about building permits. Retail sales, not the biggest thing. The biggest thing is going to be the FOMC rate decision, Fed rate decision, and then obviously the press conference at 2:30. Expect big volatility, large moves, hotly anticipated. There's a obviously a 25 basis point cut being baked in. As you can see, 5.5 is the benchmark rate right now, right? Um, and then the consensus forecast is 5.25. So a 25 basis point cut is what the market is projecting. There are like odds, about a 49, 48% odds right now as of Friday for a 50 basis point cut. I think if the Fed does that, that would be a big mistake in my view, because that would tell the market and pretty much everyone paying attention, whether they participate in the markets or not, that the economy is slowing down faster than they thought. Because why else are you cutting rates more faster than other countries. So like, for example, Canada's cut multiple times already, but 25 basis points each. But Canada is also a very different, a very much smaller, much more, um, let's say, very concentrated economy. There's not much else going on here besides natural resources and banking, right? Whereas the U.S. economy is a lot more vast, much bigger, obviously, has many, many different industries and sectors, right? So to cut 50 basis points, in my opinion, would be a mistake. And I think it would actually be bearish for the market. The market would interpret that bearishly. All right. So that's the economic stuff there. Let's flip back here. Let's bring up some questions. Uh, we already have one from Larry Dogs. Okay, so this is a garbage Chinese company, a pretty useless app. It's called Dogness, but I call it dog shit. It's pretty much a good a good explanation of what this stock is. It's a very, very crap, um, overhyped, uh, essentially stock that's very much, if you look at it, pet products, right? Hence the name Dogness, right? So uh, it has a horrible ratings on the app. It's just not a good company. It's very heavily shorted, and obviously we're short too. They've had a split at the end of last year. In my opinion, this has got to drop. Like it's not worth anywhere near where it's at. Like the market cap right now is about 387 million. And let me just give you an idea as to the fundamentals here, okay? Just so you understand what we're dealing with. Um, let's go down, market cap, debt. So if we look at their profitability, which is, net loss, they're not profitable. If you look at what they're doing from a business standpoint, so first half 24, look at these numbers, okay? Negative revenue growth. The total revenue they had for the first half of 2024, um, you can see about 6.67 mil. That's not much. To give you guys an idea, the revenue that one of the gas stations that I had or had, um, I'm pretty much almost out of that industry, but the one gas station that we had does over 6 million in revenue. Okay, remember that's not profit. That's not profit. That's revenue, right? So just to give you an idea, is this company worth a sub 200, $387 million market cap? I mean, I should IPO Riz International at this point, right? So when you look at it all at the end of the day, they're actually losing money. So on a 6.67 million revenue, after all the expenses, all the costs involved, they're looking at about a negative 3.2 mil. So they're losing money so far, first half of 2024. They've lost $3.2 million. Okay, so that's just the importance of understanding, again, a very quick glance run through uh, of what this company is, what the fundamental situation is like. Um, Usually this is just a pre-pump. Now, if you cannot hold on, you don't have the stomach, you don't like the carry fees or the borrow rate, well, then you got to get out because it's not for you. This trade was not for you, right? And I'm not saying Larry for you specifically. I'm saying in general. Anyone that, feels very, very nervous, scared, losses will happen. But, let's be honest here. So far, I have about a 95% win rate on shorts like these. So I'm not really sweating it. You just have to kind of be patient. Again, obviously no hard stop, but this is continue to pump. We know that it can continue to pump. I continue to have patience with it. Take a look at Ride, right? Like this is one that we shorted and it ran up. Like you have to have the stomach for it. Am I saying dogs is going to come back down like this, like an 80%, 70% drop? No. But I'm going to show you the proof of concept here that usually these pumps, literally dump eventually, right? So they're targeted attacks on the long side. There's a bunch of morons in like a Telegram group or some WhatsApp group or WeChat group that are just essentially pumping it. And effectively, it's the greater fool theory. Everyone buys in so that it continues to go up. And then when they decide to sell, they sell it off altogether. And whoever is left holding the bag. So essentially leave the bag with their other buddies. That's really what this is. It's really messed up. Obviously, it's not legal, but it does happen, right? In these smaller companies that have limited amount of shares outstanding, they're smaller stocks, they're less regulated. They're most likely penny stocks, as you can see. Anything below $5 a share is roughly, considered a penny stock. Uh, so yeah, coming back to dogs, I'm continuing to hold, no stop. I have conviction. All right. Hopefully that answered your question, Larry. A question from Dylan. UPS. Yeah, so you had a position sold for profit, small profit on Friday. Yeah, not bad considering this is not a very confidence-inspiring candle on Friday, September 13th. Uh, you know, went lower. Obviously closed a little bit higher than the low, but still closed lower than where it opened, right? Hence the red day. Especially considering that the market's been bullish, this is a big underperformer. The market's been running, but this has been consolidating. So has what's known as very low relative strength. So I've been watching UPS obviously since it gapped down post earnings and kind of been consolidating here. But I haven't taken a position simply because I'd like to see a little bit strength come in, uh, a little bit more positive price action to the upside, see if we can get closer to the 50-day moving average, and then perhaps consider a position. But right now, I'm not in. If you got in, you got it for a small profit, not bad. Honestly, because this is not something you want to just have trapped capital in. It's not going anywhere. The company isn't going anywhere, but it's beaten down for a reason. They've missed earnings. Um, which you can see, just overall very depressing downtrend chart. Okay. Um, any other question? Last minute question so far. Pretty fast and furious uh, session so far, webinar. Let's bring it back to SPX. See my watch list here. Perfect. Okay, so we're back here again. So what do I think is going to happen? Um, I think the Fed cuts 25 basis points. I think the market eventually, I think it's priced that in. We're kind of in uncharted territory in two ways. One, this is the first rate cut, obviously, since the hiking cycle. This is the first rate cut, I believe, since 2020, right? So this is, it's kind of new. It's a big catalyst. It's also the market very much near all-time highs. And three, we are also going to be in the last month and a half till the election. So the U.S. federal election. So we got quite a few big catalysts. Um, One literally in the next 4 days from now, and a few on the horizon. So it's going to be important to see what happens if we continue to max out here, right? 56.25, 56.40, if we max out around here, it's going to be important to see if that's the case, right? But other than that, I continue to have 100% cash position. Remember, I have shorts open. I have short puts and short calls open, but I have 100% cash because I don't have any long positions. When you short, you'd receive cash. Hence, I actually have more than 100% cash, right? So I don't have any long positions open currently, just for transparency for those of you not in elite. And there's a reason for that. We've made money, systematically, strategically. And what I will do actually this coming week, maybe Mondays, I'm going to show you guys a video recording from the Interactive Brokers app, literally from the app. So no like taking a picture or video of a screen on the monitor, like actually screen recorded from my iPhone. And we'll show you the year-to-date performance for myself and then the year-to-date performance of the SPX, the S&P 500 index year-to-date. And then you'll see that, look, Riz, even with being predominantly cash, using his strategies, his methods, his style, how he's done. right? And that's something no one else will show you. Honestly, they won't show you. They're gonna all these people online, they'll show you one trade. They'll show you a couple winning trades, and they'll show you from whatever trash, um, you know, I would say foreign brokerage they're using, or even one of those well, funded accounts, right? All these funded accounts and prop firm accounts. Like that's not their fucking money. Like they're it's just it's brutal out there. So hopefully this will give you a little bit more clarity and some confidence, in what I do works. I don't need to reinvent the wheel. I've been doing this for 18 years now. Um, and once again, my job is to one, preserve capital and then grow capital. Far too many people try and grow capital without being able to preserve it, and then eventually they find themselves stuck and having drawdowns, and then actually worse off than when they started. That to me is definitely not what I want to do. When it comes to uh, the millions in exposure that I have to financial markets. Okay. No more questions coming in. Hopefully this gives you some clarity. Again, thanks everyone for coming on. I will have this upload on YouTube. If you're watching this on YouTube, please give it a like, comment, share, all that jazz. It helps a lot, supports us. And I hope the transparency that I've showed so far and continue to show, and I will continue to show, gives you that confidence and understanding that yes, you too can do it. Riz has done it, he's been doing it, but you too can effectively implement these things, use these strategies. We have obviously a lot of people in elite doing it and doing well. So it's fantastic. It's phenomenal. So I appreciate the support once again. Have a great rest of the weekend, and we will be back in action on Monday. Ciao.